I mean, give me a break. If people are pulling back on cereal, we've got some real economic issues ahead of us right now. Good afternoon, outliers. Hope you're having a fantastic day. Happy Wednesday to you. Again, I apologize for my tardiness. I am I'm just going to need a tardy slip for me, right? I'm just letting you down there. Hope you're having a fantastic Wednesday. Sebastian, Leo, Michael's here. Jean-Louis, Michael, other Michael is here. Good to see you. All right. So today we are changing up the content strategy starting today. So, what we're going to do is cover a top news story, one that what I found is kind of interesting. I would love to hear your viewpoints. Like, that's actually really great content, is when you and I can have a conversation. So please feel free to chime in and give me your opinions as we go, and then we'll jump into trading. So we'll go ahead and start that now. So top story of the day: FedEx stock leaps higher on upbeat profit target and possible freight unit sale. So there's two different stories here that caught my attention, right? You've got the FedEx jumping higher on upbeat profit target, but possible freight unit sale. So what does that mean? So basically, they're saying that, hey, yeah, we're making more money, aka inflation, right? They're pricing everything higher whenever they send their packages, but at the same time, they're planning on selling off airplanes. So what does that tell me, right? That tells me that number one, FedEx is absolutely making money hand over fist. We can see that. But at the same time, people are shipping less packages, right? If they're selling off airplanes, if they're selling off trucks, if they're selling off cargo containers, then I think there is actually um, a real inflationary is not the word I'm thinking of. A real demand pullback, right? And it may be Amazon's fault, right? I mean, Amazon comes to my front door. It seems like 3 times a day at this point, dropping off different packages. But let's take a look at the article here. FedEx shares jumped as much as 15% after the delivery giant reassured investors of a bullish annual profit forecast and said it's weighing whether to sell or spin off its freight trucking business when an analyst valued at $30 billion. So you're telling me that you're making so much money hand over fist that you're willing to sell off a $30 billion share of your business? I don't know. Something smells really fishy on this, right? FedEx massive restructuring aims to improve profitability, which was lagging because of a unionized rival with UPS, while also girding girding against competition from Amazon's fast-growing logistics service. As the Memphis-based company enters the next phase of its strategic plan, it is reviewing FedEx's freight trucking business, referred to as LTL or less than truckload. That business is the largest in North America, it generated 2.3 billion in revenue in the last quarter, despite a stubborn 2-year slump in the U.S. trucking market. So they're charging more to deliver the same packages, but the less than truckload, so I assume that's like packages, right? Not an entire truckload. Packages business has been falling. And so they're saying, you know what? We're just going to get out of this market. I don't know. To me, that doesn't sound like a great economy. That sounds like, to me, people are deciding not to buy as much. At least that's the way I'm looking at it. Hey, good to see you, Yorn. We're starting our new content schedule today, Yorn. So jump along for the ride. By the way, did you guys notice the new background? Right, looking sharp. Let me show you this. Right, we got the new blue background. We got my name down below so people know who's talking. Right. So yeah, this is cool. We're making some big changes over here at Outlier. Now on the other end of the spectrum, we go from FedEx to General Mills. General Mills stock is falling as the fourth quarter sales drop 6% year over year. Now, I am a huge a serial killer, if you want to think of it that way. That's what we call it at my house. I will eat the mess out of some honeycomb and what is the other one that I love? There's this one. It's like generic brand. I don't even know the name of the brand, but it comes in the big bags, right? The big like 36-ounce bags. Um, it's just called s'mores. Oh my gosh. That with some Fairlife milk, give me that's a whole meal for me. I can eat the mess out of that. But part of this has to go with the fact that people are actually pulling back on food. And in one way, they're pulling back on food, surprisingly so, is consumer staples like this, right? You would never expect that cereal would be one of those items where people decide to pull back on when their wallets are pinched. But yeah, General Mills shares are trading lower on Wednesday following the company's mixed fourth quarter results release. The food manufacturing giant reported a notable 6% year-over-year decline in sales for the quarter, alongside softer than expected outlook for the upcoming quarter. I mean, give me a break. If people are pulling back on cereal, we've got some real economic issues ahead of us right now. So I do want to take a look real quick at the GIS. So this is General Mills stock price here. We did get a buy signal. Um, when did that come? Let me zoom in just a little bit here. We got a buy signal not all that long ago, on April 25th, and it's kind of been drifting sideways to down since that point. But overall, using the performance summary, you can see Outlier still got a 24% positive expectancy there. So, yeah, I mean, General Mills, it hit a high of around $90 a share, and then it hit a low of 65, and it looks like now it might be heading back to 65. And then FedEx, let's see right now, it's been hovering around this 250, 240 range for a while, and looking at the performance summary here, at 31% there. So both of those stocks show positive expectations, positive expectancy inside of Outlier. So definitely something to keep track of. Now, let's move into our market analysis. All right. There we go. Welcome to the OVTLYR Trading Room. This is how to trade in about 10 minutes a day. Wait a minute. This is how to trade only 10 minutes a day, and exactly how to take the guesswork out of trading. Now, I am a partner with OVTLYR, full disclosure, and this is my style of trading using OVTLYR, but OVTLYR delivers you new opportunities every single day. Now, with the golden ticket trading strategy, it always starts with the market. We've got a lot to do today. So let's go ahead and jump into the market. We can see the market is pushing higher, 10 over 20, price over the 50. So all of that is looking north. Now, the next step before we go on to anything else is to check the market breadth. This is somewhat new, but let's go ahead and check it real quick. Looking into Outliers market breadth, we can see that yes, the market breadth is trending higher right now. So this is definitely the place that I would want to be looking to trade long. So going on to the next step here, we need to do what? We need to reduce risk. Now, like I say, we've got a lot to do today. So let's start at the top and work our way down. So starting at the top here, HRB. HRB. I know we have an exit point on this, and I'll show it to you real quick. So one of my exit points is a heat map stall, meaning the behavioral heat map down at the bottom stops getting more greedy and either reverses course or just stops going up. So the value we're looking at is on this row up here. It's a G15 today. It was a G15 yesterday, G14 the day before. So the heat map has stalled out. That doesn't necessarily mean that the stock is going to go plummeting back down, but it does tell me that the interest in it may not be as great as it was just a few days ago. So that is the first one we need to exit. So let me go ahead and I'm going to log into Tastyworks, and we're going to exit that first, and then we're going to work our way down some more. We've got a lot to do today, like I say. All right, so the password is 420 69 69 420. Yes. Okay, that logged me in. Remember, I am a 9-year-old. All right, HRB, hurry up already. Checking it out in my business account. Going to be closing full position. So we were in the HRB July 19th, 50 calls. And we just got into that yesterday, so it would be looking to close that today. See if we can get out at 375. That's order is working. So we got in HRB, where did we get in at 380. So at 375 to get out, if we can get filled at that, that's a decent just break even on the trade, basically. A decent scratch. Not filled yet. Let's work that down just a little bit. Let's try 370. Okay, I'm out at 370. So out of HRB at 370. Just a 10-cent scratch on that one. No big deal. That's part of trading. Let me go over here. And Let me find the HRB right there. Reply. And that would put the closed information. Today is the 26th, closed HRB. 50 calls for, that wasn't 350, that's 370, right? 370, yes. So what did that do to my portfolio? We went from 380 when we got it on to 370 that we got it out at. And today is the 26th. So it was a negative 2%, a 2% loss on the trade, 2.74% loss, which did all of nothing in the portfolio, I can tell you that. 27 basis points. That's what it did to me. No big deal. Heat map stall. Okay, perfect. Done with that one. Let's move on to the next trade. So I'm going to take this off my list here. Next one, EQR. EQR really frustrates me because yesterday when we were doing our analysis, it was fine. By the time the market closed, it was below and it looked like it was moving back up. It never actually reached that point, and then it collapsed down another 1% today. So very frustrating, but we should still have an overall profit on the trade. Let's take a look at that real quick. So it's EQR. So we rolled up EQR, if I remember correctly. I know we rolled it up. We rolled it from the 65 to the 67.5. So I'm going to reply to that message there. So we're going to be closing the 67.5s on EQR. So July 19th, 67.5s, which, you know, rolling that up absolutely saved us money. We actually are making more money now than we would have. Now, it's going to show a loss inside your broker because you're losing on the roll, but you still won on the original trade. And we'll do the math here in a minute. 117 mid price. Try 116, see if I can get out. Working at 116. While that works for just a moment, let's do the math. So in EQR, we paid 305 to get in. So imagine negative 305 to get in. Okay. And then we took in a credit when we rolled it of 215. So we reduced our risk from $305 per contract to $90 per contract when we did that. Now, when we close this here at not filled at 116. Let's pop that down to 114. I'll go 113. Out at 113. So now we just got out at 113. We still got a winner, right? We still got a winner. Not a huge winner, but we still got a winner. And that's pretty cool because, right, it went up and went right back down. Granted, if we had gotten out yesterday, we absolutely would have made more money. 100% agree with you on that, but still a winning trade. So I'll take it. EQR, we just got out at 113. So basically we paid 305 to get in, and the total between the two closing trades that we put on, the roll plus this one here, totals 328, which is how we got our total gain on that. So total gain on that was 7.41%. Not too bad. Not too bad. Closed EQR. This was a 67.5 calls, right? Yeah. For 1.13. So that is a 7.41% win. 7.41%. I'll just leave it at 7.41% win. And that did what to the portfolio? That was a 68 basis point win on the portfolio. Oh, actually, that's a negative right there, isn't it? And reason why is closed below half ATR after rolling. Okay, done with that one. All right, getting some buying power back by doing this. Let's go to the next one. EQR is off our radar. Let's go to CL, Colgate-Palmolive. This one we rolled as well, and it's actually above our half ATR. Yep, still above there. Not a lot, but it is. So on this one, you know, I don't have a reason to exit, right? If I go, hey, Peter, good to see you. If I go through all of my steps here, 10 EMA is not broken. Half ATR from the roll in this case is not broken. Why is this still showing? The heat map has not stalled. I already checked that. And then it's not below yesterday's low. It is below yesterday's low. I want to close it. It is below yesterday's low. I didn't even see that until right now. That's why we have the PowerPoint. That's why we have all the steps here, so we can actually like confirm and see, hey, did I do everything? And it absolutely is below yesterday's low. Pretty close, but it's so close to one, so close to the other. I would feel way more comfortable to just take our profits and move on. So closing CL, close full position. We're closing the July 19th, 95 calls. Now, I believe we did roll CL before. I know we did. We had to have. Yeah, we rolled it up here. Yeah, there it is. Like I said, we got a lot to do today. Closed CL. This is the 95 calls. And let's go get filled. So current price is 380. See if I can get out. Filled at 380. Okay. Filled at 380. And what did that do for me? So let's do the math. The way that this one worked is we paid 480 to get in. So let's clear it all. So minus 480 to get in. And then we rolled up for a 235 credit plus another 380 credit right now closing it. So 135 is the total profit. So that's profit. So 135 divided by 480. No, 135 divided by 480. Around 28%. So in my account here, 28.04% is what I got. I'll take it. 28.04% win. And that was a portfolio impact of, oh, nice, 3.38%. And recent buy is close low prior low. Easy. All right, moving on to the next one. And let me know if you have any questions as we go. Jorn says, that's why we use a checklist. Exactly. All right, moving on. BTI. BTI blows. So does AER. These two we put on yesterday. They both super suck. I'm not happy with either one of these, but that is the way that trading goes sometimes, right? You put it on, hope for the best, and then it just doesn't work. I would not at all, not even a little bit, be surprised to see this bounce right back up here tomorrow. I would not be surprised at all, but I can't take that risk. If you want to, by all means, you do you. I can't justify holding it though. And BTI, again, very frustrating. This one, if you remember, you can go back to yesterday's trading room. I said, I don't like to put on trades when they are below the prior day's low, right? And it was at 32.19 when we got on. The prior day's low was 32.16, and then it ended up going down. I would have skipped that trade had it been on 20 minutes later, right? Again, like what was that, EQR? I would have closed that trade if it had been 20 minutes later, but sometimes that's how trading goes, right? Sometimes you just hit it out of the park. Sometimes you got some suckers like this. So we need to close BTI and AER like immediately. No reason to keep either of these on. Okay, so BTI is first. And by closing these, we're back to we're back to flat, ready to have the full portfolio. All right, BTI. We need to close the $31s. BTI July 31st, $31s, right? Got into it yesterday at $1.25. Today we're going to get out right around 85. So yeah, that definitely sucks, but also part of trading. So I'm going to put in 85 and let that rest for a minute. So 85 is working right now. All right. So that's not working. Let's go to 80. Okay. I'm out at 80. I'm out of BTI, 31 calls at 80. Not the greatest trade ever, but then again, keeping your risk in check is the number one most important thing you have to do. Over here. All right, close BTI. It was the 31s for 80, which was unfortunately a 36.27% loss. But to my portfolio, it was only a 3% change. Negative 3.24% portfolio impact. Close below half ATR. So net balance, I'm up. So I'm not really stressing on all this stuff. And that's how it goes, right? You take 2 steps forward, take a small step back, things happen. So BTI is out, and we need to get out of the last one, which is AER. Get out of my life. AER. All right, AER, we were in the 92.5s. July 19th, 92.5s. Got into that trade at 525. This is an ugly one at 330. 330 is mid price right now. I'm gonna put an order. I'm gonna put an order in at 330 in AER to close the July 19th 92.5s at 330. Maybe we'll get lucky. All right, I'm out. 330 was the faux price, so that's fine. So let's go to AER. Reply. Like I say, on balance, I'm up money, and that's what I care about. Win rate was actually pretty decent, right? We won 1, 2, 3, 3. We won 3, lost 3, but the losses were decently small. So overall, net win. Closed AER. This was the AER 92.5 calls. That's right. And we got out at 330. Uh, 37% loss, or a portfolio impact of 3.14%. All right, so moving on, let's get back to business here. So the next step, now that we've got all of our money back, all of our money's working, next step is to look at today's buy and sell signals. So today's buy and sell signals, we got the watch list. You see it's 45 today versus 16 there. Filter for green overlays. I've not had a chance to do this yet, so I am going into this blind. I don't know how many we're going to have. I'm going to copy everything that's June 26th. June 26th. Filtering for only stocks with over 1 million shares real quick. By the way, spoke to Mahesh this morning. He said that we should be able to have this filter like what we're working on, and other filters. You can put your own filters on it. We should have those within a week and a half. So very quickly we're having these upgrades, right? Not too many, right? There's only 7 here that pass my test. Go to the bull list, edit. Now I'm going to run a quick scanner on these, and the scanner is just going to check. Oh, just one? Wow. The scanner is going to check for no order blocks in the way, no earnings the next 3 days, and the price is in the direction of the trend. Surprise, there's only one. Let's go look at all of them. Okay, this one's under $20. $20 is my limit, so I'm not even interested in T-Mobile or AT&T. SFM. I can't see a reason why that would. Oh, that one's good. SBRA. Under $20. NI. I don't see any earnings out here. It might be not far enough away from this order block, so it's still catching that. So this one I'm interested in as well. Let me just highlight this one real quick. Add a color flag. Okay, this one's inside of order block and it's only $5, so not interested. KDP, inside of order block. AM, also inside of order block and under $20. So we're only going to look at NI. I can't see why this wouldn't pull through other than it might not be far enough away from this order block, and that might be causing the issue. So NI and SFM. Let's go take a look at these. All right. The objective here is to confirm that the outlier signals have positive expectancy. And also we're going to double check the breadth of the sector. So the sector's utilities, we'll let that load for a moment. Actually, let's go over here, performance summary, positive expectancy. That's what I want to see. And we'll switch to utilities. We want to see utilities market breadth also showing higher. Oh, look at that. Well under 25%. But it is trending higher. So that's interesting to me. Now, my rules, let's go over that real quick, is if I'm in a trade and it goes under 25%, once it changes directions to stop trading, halt trading, right? So in this case, if I'm in going short and it's hit this bottom and it starts going back up, I stop going short. So in this case, I would be confident going long because we do have that crossover here. So I don't have an issue with that one. And then SFM and Staples. I know we looked at Staples a couple days ago. Yeah, definitely trending higher. Put on the 10 instead of the 5. Yeah, for sure. Okay. And performance summary, 176% outlier. That's pretty outstanding. Okay. So those two I am interested in trading. Let's go to the options chain for them and let's look at the criteria I have for trading options real quick. 21 days to expiration, 250 plus on the open interest, less than 50-cent bid-ask spread, 20% or less extrinsic value, and generally around an 80 delta. So let's jump into those. Let's start with SFM first. All right, we have some liquidity here. That's what I want to see. I wasn't sure if we would. Around the 70 delta, though. That's okay. 944 open interest. Extrinsic, $1.18 over $4. So 118 divided by 400. 29%. It's a bit high for me. Lots of open interest, though. The spread is 20 cents. We could make it work. We could make that work. And while we're at it, let's just go look at NI real quick. Oh man, this spread is huge. Lots of open interest here. But this spread is $2 wide. That's weird. Let's give that a minute. We've seen a couple of times in the last few days where these spreads can widen out real quick and then come back down. So let's just let that work for a minute. All right. But this one, it's a little bit expensive on open interest, or I'm sorry, on extrinsic. But otherwise it seems to fit. So I think we could fudge that. So SFM, 80 calls. I'll go to the business account on the other screen. SFM, July 19th, 80 calls. So get your position size. And the way to do that is by going to Discord, go into the VIP Investors Toolkit, click on this power scanner right here, and then that's going to pop up this file. And then just put in what stock you're looking at. So SFM and NI. Sometimes when the data isn't working correctly, you can just refresh the page. And hopefully it'll work for you. That's annoying. Mine on the other screen is not working either. That's super annoying. Here's the math behind it. So you take your account balance, divide it by or times your risk percent, and then you divide that by 2 times the ATR, and then you divide that by 80 to get the number of option contracts. So I guess we're doing it old school style. So imagine you had a $400,000 account, and imagine that wait a minute. Yeah, SFM. I thought I had SFR for a moment. SFM. And then imagine that the ATR was $1.83, so 183. You would do 400,000 times 5%, right? Because that's the risk that I like to take. So 400,000 times 0.05. Now you divide that by $1.83 times 2, which is 363, right? Divided by 3.63. So that's 5,500 shares. And you divide that by 80 for the approximate delta. That's your number of contracts. So that is the math to get there. So let's do that real quick. Yorn says his isn't working either. It must be a Google thing. All right. SFM, 80 calls. SFM, 80 calls. And looking at a price of around 390. Let me see where I can get filled. Putting in a trade at 390, not filled. Okay. But wait, it did get filled at 390. Just popped in right there. Let's go over here, update this as a new trade. Trade number 1. But that's the right strike. SFM. This was the 80 calls for 390. It's currently at 82.65. Okay. That's trade number 1. And then let's go to trade number 2, which was an NI. July 19th. No, this is still so wide. I can't believe that. I legitimately cannot believe this. You've got over 1,000 open interest. And this is like stupid wide. It's like $3+ wide. So I can't trade that. I mean, we could fudge a little bit on the extrinsic value like we did a minute ago from 20% up to 29%, but I'm not fudging $3 wide there. But I tell you what, you might get like ultra lucky and put something like, what is the actual extrinsic value? I think that's the real issue here. Or what is the actual price of the stock? If it has no extrinsic, let's just do that math real quick. So 28.95 minus 25. That's 395. So that's the actual price of the option right now. If there's no extrinsic, that's the price, 395. I don't know what this is about. And even if it was 395 and 520, that's still way too wide for me. I'm not trading NI. So that's going to wrap it for today. A lot that we did. Let's do recap real quick. We closed everything. Closed HRB, closed EQR, closed CL, closed BTI, and closed AER, and then put on a new trade in SFM. So a lot done today, but of course, that is how it goes in the OVTLYR Trading Room. And that should be it. So I'll be right back here tomorrow. I hope you will be as well. This Friday, we will have a special live stream that I really encourage all of you to come to. It's going to be about the affiliate links. I've actually been personally taking an affiliate marketing course this week to really prep up for it and to give you any pointers and procedures that could work for you. We're also building an affiliate resources section, so you should be able to just go into there, grab some shareable assets, and rock and roll with that. Like, we want this to be ultra successful for you. Basically, the way that I like to tout it is my Tesla is paid every single month through affiliate marketing, which is why it's so cool, because I drive around in a free Tesla. And I hope that we can do something similar for you with OVTLYR. And honestly, I hope you get 27 Teslas from it, because it really is that awesome. So thank you all so much for coming to today's OVTLYR Trading Room. I'll see you right back here tomorrow, and hope you have a fantastic day. Talk soon.